Market observations for the Gold Coast, Queensland. Now, this was one of the areas that we did touch on in our recent survey from you, our audience. It was a close runner-up to the Sunshine Coast, but since we have launched the Sunshine Coast video a few weeks ago, there has been a tremendous amount of questions and demand for the Gold Coast. Okay, so now without further ado, we will be taking a deep dive into the Gold Coast. Today, I'm going to be investigating some of the demand and supply drivers coming into the Gold Coast. We're going to be looking at which suburbs potentially would be leading the area forth. So we will be doing a suburb versus suburb analysis. We'll then be going into one suburb in particular that is one of my preferred locations that we have invested there over the last few years with clients. And then I'm going to be doing some street level analysis. Bonus material at the end. I am going to be looking at the wider Gold Coast area and the context of where it sits between the Logan area, the Brisbane area, the ocean, and then south down in towards New South Wales. It is in a very particular geographic makeup, or differing influences that do push and pull the Gold Coast. So we need to understand it intimately. And then you also have the Gold Sunshine Strip with high density units, and then inland suburbia with the larger blocks. So we need to get that property mix right. So check out and wait towards the end for that bonus material. Look, we do this for the love of it. We do this because we like generating this content. We like getting it out there. We like property investment, and I like research, okay? But I also love positive reinforcement. It really means a lot to myself and the team when you do say, great job, can you do this next time? Or maybe if you tweak this, give us a thumbs up, like the video, comment on the video with anything you'd like to see differently, any suggestions, but any other areas you might like us to focus on. And please subscribe to our channel. It means that you are giving us a big thumbs up. Well done, guys. But it also means that you'll be the first to view our videos if you click on the bell icon to be notified when we do release future videos. So without further ado, let me dive in here to the Gold Coast. Once again, we do need to remember that property investment is a science. I also always start with this as a statement. I cannot reiterate it enough. Property investment is a science. The algorithms, the data, they do the heavy lifting, but you need to add the human touch. Okay, and I'm going to give this example. I've been a property investor for almost 20 years. Okay, I'm a software engineer by trade. Okay, I have been in data and research now for many, many years professionally, and also with Ripehouse. I understand how the data fits together. Every month, Eric, our head of research, a data scientist, an actuary, and I, we talk about the different locations that the algorithm is highlighting. And me, with my investor hat on and the experience that I do have in finding areas, we filter that. It might be over 100 new suburbs that he would recommend from a data perspective. It might only be 1, 2, or 3 new suburbs that we would add each month as investment grade. The data takes us a certain way, but we need to have that investor cap on. So whilst we have the best in breed data algorithms in the industry, far and away our results since 2015 definitely confirm that, I, as an expert investor and an experienced investor, have to come in and provide the investor lens over the top. The human touch does need to be applied, and it comes from many, many years of experience, seeing suburbs perform and not perform, owning properties in those suburbs now for multiple decades that have performed and not performed, to be able to filter areas in and out. So the data is very important. This type of analysis today is the human touch. Hopefully the outcome from these videos is for you to learn how to apply that human touch and use the data effectively. Market opportunity. Remember, we're all about the where and then the when. When we're looking at the market opportunity, it is about the where. Firstly, if we can remember the formula, employment is our first area of study. Excellent diversity. I'm going to skip through this quickly. Excellent income growth and very good commute times. For a larger centre, Gold Coast obviously is a very quickly growing area. A lot of people are now living there. This type of commute time is actually very good for this area or this size of population. Employment cannot get much better. Unemployment rate has popped up recently. Okay, going into 2021, I'd like to have Eric update this into the 2022 figures for these charts. Okay, this may be seasonal. Remember, the Gold Coast has a lot of transient workers, a lot of tourism-based employment. That may have been impacted through lockdowns, etc. New South Wales, Melbourne lockdowns. Expect that to recover back down to these 5% unemployment levels. So really, unemployment not an issue with the Gold Coast. It is always going to be a central hub of people moving north. New projects coming into the pipeline. Spend per capita is average, $8,000 per person. But the actual dollar spend is very good. As a local government area, there is a large population centre, a lot of people living in that local government area. Whilst we have the big ticket items, the spend per capita is average. But when you look at these items, it really is improving the livability of the area, the lifestyle factors of the area, and then you have the key commuter connectors. $1.5 billion on transport upgrades. So there is a lot of focus, and Queensland are always forward-leading in improving infrastructure before the population gets there. The Queensland government want population moving to the Gold Coast area, and they are saying this in very simple terms: we're spending money on infrastructure. Okay, so new projects, very good. As you would expect, very good in terms of lifestyle accessibility. It has all the lovely things that you need. Obviously the large beach, the nice hills and the drives and the Tambourine Mountains, etc. And you have the Bunnings, right? You have things here that you need. You've actually got a localised airport, a connector into the major cities, very well serviced by hospitals and obviously shopping, retail, tourism, restaurants, a great lifestyle precinct. Population is extremely strongly growing, right? We've gone, this is a long-term trend, guys, from 500,000 now to sort of over 600,000 well and truly. This is, so 6% population projection. This is internal Ripehouse data. It has been cleansed from COVID. We did extensive work with Bernard Salt from a demographer perspective. This is Ripehouse projected population growth. It is excellent. It's almost off the charts. Australia-wide, 6% in the next 3 years. Very high population growth. And a general undersupply, where population is exceeding the supply that is coming into the market. So this is a tightening coil from a macro perspective. Excuse me about this chart, okay? This is something that we are fixing. Each of these little polygons here is a suburb. Okay, when you join them all together, there's many, many dozens of suburbs here, and some of them are overflowing into the next. So we will be fixing that very shortly, so do excuse that. 3.1% new supply. Okay, so we do have generally on Australian level, high supply, high new supply, but the Gold Coast is an area of multiple push and pull, multiple economies within one. We have very well established high density units, apartment blocks, etc. through the Sunshine Strip, and inland we have very, larger, lower density, rural almost blocks. It's a very strange mix sometimes in the Gold Coast. And then this northern precinct here on the connectors up into Logan and Brisbane, this is where the population is moving into. So if you get your timing right, if you get your suburbs wrong, you're coming into a suburb that's got 14.5% new supply coming into the pipeline. There's 11% down here. Outside of that, supply is not really an issue. We generally focus our attention into middle market Gold Coast. Stay away from new homes, new home construction areas. When we do focus in and around this middle market Nerang, sort of just one suburb back from the Sunshine Strip, this is a very well established, built out area. Built out over the last 10 to 15 years, we generally have low supply. So stay away from high density, stay away from units, stay away from new housing estates, stay away from the northern areas of Gold Coast. Focus our attention on this middle market established Gold Coast area. Overall, the summary is Gold Coast is in the top 97% of all local government areas across the country. The where is a big tick. It means the short, mid, longer term signals that we are seeing from the Gold Coast are outstanding. The where, yes, let's now see if it is the right time to enter into this market. For that, we do purchase analysis. Days on market, extremely tight. High immediate, is there high competition? Well, going into Christmas, it was extremely high competition and the heat has now come out of the market. So this is once again another one of these areas where potentially we are seeing signs of the steam exiting the market. The coil is unwinding. The pressure has been released from Christmas through these very high competition times, now down into, average or low competition, low number of immediate sales. So that's now our first signal that maybe we've hit a peak. Stock inventory, it's now creeping up. So once again, the market tightened here, had a huge amount of high competition. The market was coiled up and it started to release. Days of supply has been relatively constant. So whilst the stock levels have been increasing, we've still seen nice, resilient and buoyant transactions occurring. Okay, so people are still pushing into this market. Days of supply is steady. That's a good sign. Asking price, extremely bullish over the last 12 months. Look at this, from 720 up to 900,000 at a local government area level. All right, that's extremely high capital growth. And as you all know, what is the main outcome that, increases in price generate? It generates a decrease in demand. Increase in price lowers demand. Is this the case here? So if we track back here to Christmas time, this is when there was extremely high competition in the market, and as the competition has decreased, prices have still kept pushing forth, and now the steam has really exited the market. It's trying, but we've formed a plateau here, just sub of the $1 million mark. Vendors discounting has come backwards as you would expect. It got as high as 4%. That means if a property is on the market for 400,000, offers over 400,000, it's going to be selling for 4% above that, 416,000 on average across the whole suburb. Since this, this is probably a month or two delay from the earlier signals that we were looking at, the discounting rate has reduced. This is a seller's market. And when you get down into negative discounting territory, it becomes a buyer's market. We're still not there yet. We're still in a light seller's market, but we definitely have had a lot of the steam come out of this market. Sold prices, as you would expect with the previous two charts. Look at this, very flat. This was our entry point for many clients coming into the Gold Coast market. Shout out Chandra. How are you, sir? I know we're looking for another property for you, and we did enter this market in mid-2020 with Chandra. And I know that was in Pacific Pines for 500,000 and something. Okay, I know how much your property is worth now, Chandra, and I won't mention it publicly, but you've had this growth. Okay, this was our entry point into this market. This was potentially another entry point here, not here, not here. We've seen from when the steam has now left the market. Let's see how long that's potentially going to last for. Is it going to be years? We know now this market has great long-term potential. We've just missed our mark. It is now at a peak. The steam has pulled out of the buy side of the equation. We now want to work out, is it going to be a matter of months before the steam comes back into the market? Is it going to be years? Is it going to be many years? So let's have a look at the rental equation and see if we can get any clues. Vacancy rates, still extremely emergency low levels. No one can rent a property in this area. It does not get much lower than this, under about 0.5 percentage point of vacancy rates. Tom here in the team recently did tell me there was a time when anything below 3% vacancy rates was considered a tight rental market. Okay, and that would be one of the check and balances that I would use personally 10 or 15 years ago, before we had this sophistication around data analysis. The average vacancy rate across the whole of Australia as of July 2022 is 1%. This means it is extremely tight. It can't really get much tighter than that physically to go through an open home process to get a property rented at 1% vacancy rate. Okay, it's 2 weeks a year. That's how many weeks it takes to list a property, get some open homes and get some leases signed, right? So this means that you've got a lineup of tenants ready to move into a house the moment that a tenant is moving out, all right? There's really hardly any handover whatsoever, 1 week where a property is on average vacant. Okay, that's extremely low. This is causing tremendous pressure over to the buy side. When you have this lower vacancy rates, maybe this market peak won't last too long. Maybe there is another leg up ready to go. So even on these low vacancy rates under 1%, we are seeing that translating into people paying more to rent properties. So they have a willingness to pay. They have money that they can afford to pay to land that property that they are so wanting to rent. Okay, and they've continued to push and push and push. We have seen $690 up to now almost $800 a week in average asking rent across the Gold Coast. And when you remember how many units are in the Gold Coast, this is extreme high rental yields for this type of area, this type of price point. Okay, so this is going to continue pushing. Low vacancy rates are still pushing rents higher and higher. This is only a very short-term plateau here. I would expect this to continue. The yield is now recovering. So when we can see that prices have plateaued in the last few months, rents are going up, yields, guess what, are coming back up here to the high point in the cycle. Once they almost get back up to 5%, 4.75%, that's almost another buy zone for me. I know what this market is generally like. When yields get up over 4.5%, almost pushing 5%, the rental side of the market is going to shift back over to the buy side. So my hypothesis is not right at the moment. Let's keep watching the Gold Coast very closely. There's probably going to be opportunities poking their head up as the year goes on. This is an area that's fighting against the whole dialogue of interest rate rises causing lack of demand in housing, backwards pricing. You can see with this market, the strength of the market, the rents going through the roof, that this is really going to quickly translate back over to the buy side, potentially throughout 2022. You know, if people are coming in here having to pay $850, $860, $870 to rent a property, and they're looking, even with high interest rates, they're looking at what the interest rates and the mortgage repayments will be. If it's substantially less than $860, well, guess what? They're still going to go and buy. And we'll see that transition from the rental to the buy side potentially occurring in 2022 in the Gold Coast. Overall, let's do an investigation of the individual suburbs in the Gold Coast. I have ranked them in order here, based on which ones are most firmly in the buying window. So if you had a gun to your head and you had to buy in the Gold Coast right now, we're not necessarily recommending it. The top of this list are the most highest potential in terms of in the buying window. And as you go down this list, we're getting less and less potential. So there's 80 suburbs in the Gold Coast. In the green, they are all firmly in the buying window. The data is telling us a buy. Our algorithms are ping, 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 buy, buy, buy. I, as a person, are coming in here and putting the pause button on this for a few months. Okay? Suburbs, though, that we would be worthy of our attention, potentially not number one. $2.8 million, reasonable yield. These ones here where the yields are in the 3, I'm not going into those. They're too concentrated on owner-occupiers. A lot of the middle-class areas that we've typically focused on in the Gold Coast are areas like Pacific Pine. Some of the lower socio areas like Nerang, if you get that right. But Pacific Pine is a real standout for me, and I have loaded that up into our data sets. I have loaded up Pacific Pines into our data set so we can analyse it together and try and get our bearings. So the data is telling us that it's firmly in the buying window, but I'm just having a pause against our buying opportunities there for the moment. We work down to the street level analysis for Pacific Pines, and I will go onto a map in a moment so we can get our wider bearings. Great owner-occupier appeal. You know, broadly across the suburb, we're seeing lots of areas with 80%, 70% owner-occupiers. There are some clusters here with 50%, 30% here, which we do need to stay away from. Generally, you're coming into this market to buy houses. You can see that there is a cluster of higher prices here in the north and a cluster of lower prices down here in the south, and one very low priced pocket here, which we do need to further investigate. Rental prices, it's almost an inverse, slightly more higher rentals here in the north where the prices are higher, but some of these pockets through the middle are showing lower prices or low-ish prices and higher rents. You know, potentially these few pockets through here, I'm seeing that correlation. And lo and behold, yes, we have through the middle here higher yields compared to these areas right over in the west and these areas in the north. Now, what's causing some of this is public housing. We do have 4%, 2% public housing, not enough to be a concern. So very little public housing across Pacific Pines, even with the price point in this suburb, okay? which, you know, is probably starting with a 7 for most of these houses. Even with a price point in the suburb, you can achieve quite strong yields if you get your street level right. Now, I can remember when we were looking at this suburb as a buy point 2 years ago, 2020, when we were looking at properties starting with a 5, we were expecting 5.5% yield on a $500,000 purchase. Sorry, actually, we were buying properties starting with a 4 in this suburb, high 4s, and the yield we were expecting was 5.5%. You know, $520 a week in rent on a $480,000 purchase. Expect with this rental pressure, particularly through somewhere like Pacific Pines, through the middle of this suburb, when these streets start hitting over 5.2, 5.3% yield, that's when we're starting to get back into a buy zone. All right? All right, if you're not aware, you've got a lot of high density, you've got a lot of, you know, SeaWorld, a lot of retail, tourism all along the beach, and then you've got Brisbane up to the north, and you've got a lot of suburbia, a lot of population, lower density through that middle ring here. A lot of the services, unis, hospitals, etc., sports stadiums, all through this middle ring. And then you've obviously got the road, which is a key commuter hub, and the train line to Brisbane. And the road and the train line all work along this inner artery to the north, the M1. Okay, so if we go over here to the satellite view, you've got all the action happening over here. A lot of the locals don't really go there. They're working in and around these industrial areas. They're working in a lot of the retail, the tourism, one layer back. And then you have a lot of the population like Pacific Pines living along this main artery, right? So they are well serviced. They can jump on a train. They can go north. They can jump on a train and drive north and south. And they can drive on this main artery straight into the Gold Coast, shopping centres, Westfields, etc. I think Westfields here from memory. These are the types of suburbs that are really well serviced. Lots of new supply coming inland and north. Okay, so this supply coming in here to the north, it's going to have better access to Brisbane, but a lot of people now in the Gold Coast are actually living and working in the Gold Coast. So areas like this, whilst they are further away from the north to Brisbane, they are closer to the action here in the Gold Coast, which is seen as an advantage. So a lot of this new supply coming in here, it's got its pluses, but it's also its negatives, and there's a lot of possibility for supply. Look at all this undeveloped land. This is all over the next 20 or 30 years going to be completed. You're going to have a whole tranche of population all through here. We've got to pick our spots. Okay? So for us, this established middle market Gold Coast is where we generally focus our attention. Narain down here into Merrimack, Highland Park, all of this inland area, even into Ashmores of the world. Right, so we really have to understand that push and pull of the Gold Coast. It's not all about Brisbane. It is also about the Gold Coast. Okay, we have to remember that. We have to get our property types right. Areas like Pacific Pines, it has to be a house. Whilst we've got units and things through here, if you were, gun to your head, having to invest through here, you would be looking at units. But in this middle market, it is firmly 3 and 4 bedroom homes. Predominantly 4 bedroom, 2 bath, because they have been built in the last 15 or so years through Stockland and all of those developers. Hopefully that's been a good investigation into the Gold Coast. Please let us know in the comments if you'd like us to focus on other areas. Also, once again, if you want to show a little bit of love, please like the video and subscribe to the channel. Make sure you hit the bell icon. Thank you so much.